Get insights into the future of electric vehicles and the auto industry with finance expert Cathie Wood. In a recent interview with Yahoo Finance, the CEO of Ark Invest shared her thoughts on traditional automakers, such as GM and Ford, stating they will face difficulties in the next 5 to 10 years and could merge with other companies or go bankrupt altogether. Meanwhile, Wood predicts that Tesla could dominate the car market in the next 5 years, with its stock hitting $1,000 by 2026. While she's a well-known Tesla supporter, Ark Invest recently purchased 158,000 shares of GM, indicating they're keeping an open mind about investing in the company. Get the inside scoop on the future of the auto industry with Cathie Wood. Welcome to Prima Invest, where we will give you information relating to all things investing. Let's get to the video. Enjoy. Cathie Wood, who is known for liking Tesla and is well respected in the finance world, said to Barron's that GM and Ford will face a lot of difficulties in managing for the next 5 to 10 years. She thinks it's possible that these companies might merge with other companies or go bankrupt altogether. Wood thinks that if Tesla does well with self-driving cars, it could get a big part of the car market in the next 5 years and that its stock will hit $1,000 by 2026. In contrast, GM has a positive outlook. According to David Wiston, a Morningstar analyst, he values GM stock at $68 and stated that GM's vehicles have excellent quality and design, and their lineup is competitive, indicating that the company is matching in size with its cost base. The Autonomous Technology and Robotics Fund, managed by Cathie Woods' Ark Investment Management, recently bought 158,000 shares from GM, which is an unusual move, since Wood has been known to criticize traditional automakers. This transaction was detailed in a recent report on the company's trades. In a recent interview with Yahoo Finance, the CEO of Ark Invest shared that they had a meeting with GM CEO Mary Barra to discuss the company's electric vehicle projects. She also mentioned that her company is considering investing in GM and keeping an open mind about it. Cathie Wood stressed the significance of being open-minded and recognizing achievement during her conversation with Julie Hyman from Yahoo Finance. She said that Ark Invest is still learning about GM and not closing any ideas about investing in the company. Wood expressed admiration for how Mary Barra is revitalizing GM and prioritizing cruise automation. However, in January, when Ford and GM shares jumped following the announcement of their electric vehicle strategies, Wood dismissed the rally and stated that electric cars would account for only a small percentage of their sales. In a previous Barron's interview, Wood even anticipated that GM and Ford could go bankrupt, as she did not think that they had necessary skills to thrive in the electric vehicle market. What do you think? Can GM and Ford really compete with Tesla in the EV industry? Let me know in the comments below. Cathie Wood thinks that Tesla's brand will not be negatively affected by its recent price cuts, but they may present a challenge for other automakers trying to compete. During a Yahoo Finance live interview, Wood stated that Tesla's battery technology and cost leadership are the reasons behind the price cuts, and other automakers need to follow suit to stay competitive without incurring losses. Tesla's economies of scale will allow it to increase gross margins as it reduces prices. In contrast to GM or Ford, Tesla's potential for economies of scale is greater due to its larger production volume of electric vehicles. Overall, these benefits can result in sustainable growth and increased profits for Tesla, according to Cathie Wood. Tesla can reap various benefits from increasing its production volumes. Firstly, higher production allows the company to allocate the fixed costs of research and development, marketing, and overhead expenses over a greater number of units, leading to a reduction in per unit cost and an increase in profitability as the company expands its production scale. Secondly, by purchasing raw materials, parts, and components in larger volumes, the company can negotiate better deals with its suppliers, resulting in also reduced costs per unit and improved margins. Lastly, economies of scale can give Tesla a competitive advantage in the market by allowing it to offer lower sale prices due to lower manufacturing costs to attract more customers and gain a larger market share. Moreover, Tesla can use the increased revenue to invest in research and development, to improve its products and technologies, thereby enhancing its competitive position in the industry. Hey, if you enjoy this type of content, do give us a like and subscribe. Tesla has reduced the prices of several of its models, which has led to increased demand and market share gains. In response, Ford made price cuts to compete with Tesla, but GM has no plans to reduce prices for EVs. While Elon Musk suggested that the price cuts are positive for the company, some Wall Street professionals have a negative outlook. They believe that the price cuts may negatively affect Tesla's brand and profit margins in the long run. A Bank of America analyst, John Murphy, warned against cutting prices and eating into profitability, especially since Musk stated that demand is already twice the supply. Cathie Woods recently revealed that her company would start selling its shares in the electric automaker if its stock price reaches $1,000 within the next year. Ark had set this price target in March, based on a Monte Carlo analysis, as its predictions for Tesla's stock price in 2026. Ark believes that the Tesla's product line will expand, and its manufacturing capabilities will grow as the company constructs more gigafactories. Recently, Tesla announced its plan to build a new gigafactory in Nuevo Leon, Mexico. According to Governor Samuel Garcia, Tesla could start producing its first cars in Mexico next year if everything goes according to plan. The company is waiting for its final permits to commence factory construction, and the governor believes that the first vehicles will be ready by 2024. Last week, Elon Musk announced that Tesla's next gigafactory will be in Mexico and will produce a next-gen vehicle. The investment in this factory is worth $5 billion, and it is anticipated to become the largest electric vehicle production facility globally. However, Tesla has not provided any information about when production will begin. In summary, according to Wood, traditional car makers are struggling for several reasons. One of them is their reluctance to invest in electric vehicle technology, which has put them behind companies like Tesla that has invested heavily in the sector. Additionally, they face competition from newer players like Rivian and Lucid Motors, which have attracted significant investment. Lastly, regulatory challenges are looming, as governments worldwide are implementing stricter emissions regulations and pushing for more investment in EVs, making it harder for traditional car makers to continue producing gas-powered vehicles. According to Cathie Woods, legacy car makers are in danger of going bankrupt if they don't adopt to new technology and regulations. They have been slow to invest in electric vehicles and are now facing stiff competition from companies like Tesla, Rivian, and Lucid Motors, which are attracting more investors. Stricter emission regulations are making it harder for legacy automakers to continue producing gas-powered cars, and regulators are pushing for more investment in electric vehicles. If legacy automakers don't adapt quickly, they are in danger of going bankrupt, leaving Tesla with a clear field to reach its $1,000 price target. Thanks for watching. For more videos like this, click the link shown on screen. Remember to give us a like and subscribe to our channel, and as always, have a good one.